Saudi Arabia is set to fully open its financial market to all foreign investors from February 2026, scrapping qualification requirements in a move designed to boost liquidity, attract global capital, and deepen market reforms under Vision 2030. As investors reassess opportunities across emerging and frontier markets, the decision could reshape capital flows into Africa, with Nigeria emerging markets as a key test case for how the continent responds to rising competition from global investments. Collins Nweke, Global Affairs Analyst, joins us now to break this down. Good morning, sir. Thank you for your time.
Anna, thank you for having me.
Yes, and I think the first question would be, what took Saudi Arabia so long, and perhaps why now?
Why now? Because the time has come. The time is ripe. I mean, there is one thing, for the market to have a certain expectation, but there is also another thing for that expectation to be ripe. That requires a whole lot of groundwork. That requires quite, a number of recalibration. And so at the end, Saudi Arabia is now ready. And I believe that is the most important thing, to focus on, I mean, in terms of the market expectations and all of that.
And how prepared is Saudi Arabia's market infrastructure for increased participation and even higher trading volumes?
How prepared they are? Well, Saudi Arabia is relatively well prepared. Over the past decade, it has, upgraded their trading systems, clearing and settlement, disclosure standards, and regulatory oversight. While no market is immune to volatility, I think it's important to, mention that up front because, expectations need to be managed here. The infrastructure can absorb higher volumes. Importantly, regulators have shown, agility, something investors value as much as tech. So, yeah, Saudi Arabia appears relatively well prepared for this.
And how would you say that this reform perhaps aligns with the kingdom's broader Vision 2030 ambition to globalize its financial markets?
There are no two ways about this, Joanna. This reform is textbook Vision 2030. It supports diversification away from oil, something Nigeria, I believe, should be learning from. It integrates Saudi Arabia into global capital flows and positions the kingdom as a financial hub linking Asia, Europe, and Africa. Opening the market is not, something symbolic. It is a structural reform aimed at embedding Saudi Arabia permanently in global portfolio allocation models. So, yes, this is significant.
Right. And what immediate changes will foreign investors experience once Saudi Arabia fully opens its market?
Well, Joanna, we do know that friction had been a key challenge. Now, the most immediate change is friction reduction. Foreign investors will no longer need to meet restrictive qualification thresholds, resulting in the lowering of, entry costs. Because entry costs, have been, more or less prohibitive. Importantly, it also shortens decision timeline. So decisions could be made quite easily without, considering all the, cumbersome bureaucracy that used to exist. This effectively means, faster onboarding, broader participation, and improved liquidity. Practically, investors gain more direct exposure to Saudi equities, debt instruments, and ETFs, while benefiting from clearer price discovery and, deeper market depth. So these are, the expectations in terms of, the immediate changes.
And we know that of recent, because of what's happening, the instability in U.S. markets, we've seen, investors diversify their portfolio, especially to emerging markets and frontier markets. Nigeria has benefited from this, but now Saudi Arabia brings more competition to the field. So how could Saudi Arabia's market opening influence global investor appetite for African markets?
Well, indirectly, it raises the bar. Investors will compare African markets more sharply on accessibility, FX transparency, governance, and liquidity. But it can also be positive. You know, as Saudi Arabia draws attention to emerging markets, Africa can ride that wave if reforms keep pace. I mean, we've seen quite some reforms in Nigeria. Now, what has to happen is that it's got to keep pace. Capital is not a zero sum if markets differentiate, clearly.
Mm-hmm. And do you expect capital to be reallocated between the Middle East and Africa, even as Saudi Arabia becomes more accessible?
Well, Joanna, I believe yes, selectively. Some capital will rotate towards Saudi Arabia because of the scale and ease of entry. However, long-term investors still need diversification, and I do want to believe that Africa offers growth narratives Saudi Arabia does not. You know, demographics, consumer expansion, and greenfield opportunities. The issue is not competition, but relative readiness. I think that's where the whole issue is relative readiness, really.
One would also want to consider the challenges that this creates for African exchanges competing for foreign portfolio flows. Because we have benefited from the influx, and we've seen it help the dollar. We're seeing dollar inflows. So with this now, how do we begin to manage our FX situation?
Well, the main challenge is comparative friction. You know, capital controls, FX uncertainty, shallow liquidity, and inconsistent regulation. Investors will increasingly ask a critical question. Why struggle here if another emerging market offers similar returns with fewer obstacles? You know, African exchanges must therefore compete on clarity, on credibility, but also more importantly, on consistency. I mean, you can't be seen to be dilly-dallying and expect to win the market. So consistency is very important here as well, Joanna.
Right. And taking Nigeria as an example, how exposed would you say Africa's largest economy is to shifts in global capital allocations? And are there ways we can hedge against such exposures?
Well, for a start, I mean, we've got to admit this, Joanna. Nigeria is highly exposed, both positively and negatively. It has scale, corporate champions, and strong domestic participation. But foreign portfolio investors are sensitive to, FX repatriation risk and, policy signaling. Any global reallocation triggered by Saudi reforms will magnify existing strengths or even punish unresolved weaknesses, that still exist, or except they are resolved, really.
And are there lessons we can learn from what Saudi Arabia is doing, their approach? Could Nigeria perhaps adopt some of their, approaches to perhaps strengthen investor confidence and also market depth?
Yeah, I believe off the cuff, I can think of four. Yeah, maybe, okay, let me narrow it to three lessons that stand out. First, policy coherence. Allowing fiscal, monetary, and capital market reform. I mean, we see signs that is happening in Nigeria. Again, I'll return to, the issue of consistency, okay? So that's one. Then second, investor certainty, especially around FX assets and then repatriation. We've heard President Tinubu, make some pronouncements about easy in, easy out. Well, it's, one of those that, and then thirdly, sequencing reforms clearly and communicating them relentlessly. I mean, this is not something you do one-off. There has to be a strategy about communicating them. Investors value predictability more than perfection. It doesn't have to be perfect, but they should be able to look in the future and, say, okay, this market is predictable, and on that basis, we're going to make our plan. Not necessarily that it's got to be perfect.
And we're going on a break now, but when we do return, we'll explore moves Nigeria can make to protect its market and also accelerate capital growth within the market. Stay with us. You're still watching Business Edge. Saudi Arabia is set to open its capital markets to all foreign investors from next month, and it does mean a lot for emerging markets, frontier markets as well. We've had Collins Nweke, Global Affairs Analyst, in with us providing that breakdown, and we are going to tie things together now. And I think it's next steps for Nigeria. This development, does it increase the urgency for Nigeria and by extension other African markets to accelerate capital?
Absolutely, Joanna. There are no two ways around this. This is a wake-up call. Global capital is becoming more selective, not more patient. Markets don't delay reforms risk being bypassed. For Nigeria and by extension Africa, accelerating capital market deepening, FX reform, and regulatory credibility is no longer optional. It is existential, Joanna.
And hopefully we see that acceleration in capital markets and FX reforms, even with this development in sight. Last year we did recover. Hopefully we're able to maintain that momentum and that level of stability as well. But thank you so much for your insights and perspective. Collins Nweke, Global Affairs Analyst.
Always a pleasure. Thank you, Joanna, for having me. Happy weekend.
Same to you.